Hello, my name is Michael Glass from emini-trading-coach.com, where we focus on trading high probability trading setups. Before we begin our video, we're going to start with our disclosures. Any symbols that you see today should not be inferred as a trading recommendation. No matter what you trade, stock, forex, futures, options, they all have a level of risk associated with them. You can lose your money. And in the end, any investment decision you make is only your own responsibility. Trade at your own risk. So we're going to look at the week that was. Today is Saturday, January 29th, 2011. And one of the things we'll see is last week we had a split market, but this week we have all three major indices ending down for the week. With last year, 2010, we had the NASDAQ leading us all the way. And the question is the NASDAQ going to lead us lower now? We'll have to see. We'll talk about that. We were unable to post a gain for the week. Basically, since Thanksgiving, since November, we've had this market that refused to pull back. Well, we got to pull back. A lot of it had to do with the geopolitical concerns over in Africa and Egypt that happened yesterday and continuing on today. We also had the S&P lowering the sovereign debt on Japan by one notch to AA negative. We did have some corporate news. American Express missed. Netflix blew it out of the park. Amazon met, but didn't meet what people wanted. So that was also Thursday after the close. And then tied in with what's going on again in Africa. We did find out that the GDP did improve over the last quarter. We also had some new home sales that were improved. But yesterday was really driven by, again, the geopolitical concerns. The FOMC let rates unchanged, no real change on Wednesday, no change in terminology that really impacted the market. So right now, we're looking at, again, what's going on across the seas. And we do have some economic events coming up this week that could move the market. You can see we're really coming down to the end of our earnings. Nothing really is going to move the market out of those right there. ExxonMobil, Baidu, Visa, MasterCard. But you can see we do have ADP employment. We do have non-farm payroll this week, so that certainly can move the market. We look at our technical analysis points. You can see that we're still in an uptrend, even though we had the big pullback. We want to close above 1300 to confirm that uptrend. Resistance, we're still going to use that psychological barrier of 1300. I think we got the 1302 on the S&P 500. Our support, we got support way down at 1250. We also have support of the 20 and the 50 exponential moving average. Our points of interest are going to be, again, that psychological barrier of the 1300 and 1276, the 20 moving average, exponential moving average. Will that hold up as support or is, or are we going to drop all the way down to the 50? So let's pull up the charts and take a look. So here we are looking at the S&P 500 on a daily chart. And what we can see is basically what we just referred to. We can see the huge down action, one of our biggest down days in a while. You can see it really going all the way back to November since we've had a push lower like this. And because of that, this 10 moving average that was providing us support since November was violated. And even the 20 moving average, which was, kind of touched here in January, also we did close below that 20 moving average. Now, this line that we drew in from before, 1274, it isn't interesting that it came right down and bounced off of that. But, I always like how those things come together. Kind of like in the A-Team, the guy, I love it when a plane comes together. I always love it when technical analysis and these trend lines and moving averages show things like that. So what we're going to watch for is, will we bounce here? Or are we going to come all the way down here to the 50 moving average, which is around 1250? So that's what we're going to be watching for. You can see that our indicators are leaving the oversold range, but obviously we have plenty of room to go before we get to. They're leaving the overbought range, and plenty of room to go before we get to oversold. So, our indicators have been kind of saying that we've been hovering for a while, basically since the middle of January. When we go out to a larger time frame on our weekly time frame, we can see our indicators also still overbought and need to head lower. We also have this hammer here on a weekly, so this is certainly a bearish indicator where the market tried to go higher and the bearish puts us down. So this inverted hammer is certainly bearish on the weekly. And our weekly, you can see our 10 moving average matches up with the 50 moving average on the daily around the 1250 range. As we scroll out just a little bit further and go out to our monthly time frame, we can see the same thing. We can see that we possibly have an inverted hammer setting up on the monthly chart. You can see it went right up to our resistance that we drew for you guys last week at the 1305 range. Went right up to it, air kissed it, and came back down. And we'll see what's going to hold up. Right now, we're showing that 1250 range possibly holding up. And they've got some more range to get down to the overbought. MACD never really caught up on the monthly charts for getting to overbought, but the rest of them have, so there's plenty of room to move lower. So I will look for a continuation of move. And again, Wednesday, ADP. Now remember, ADP did not coincide with non-farm payroll last month. ADP blew it out the park. Non-farm roll was a disappointment. And the challenger said this was kind of the same thing. So we'll see if those two can keep the market from dropping beyond those 1250 price point levels. Moving on to the educational portion of our video, we're using the book Trade Your Way to Financial Freedom. And he's been talking about the components of a successful trading system. And specifically right now we're talking about setups and what's the difference between filters and setups. And he's kind of gone through both sides of filters, and now he's talking about how filters are not enough for you to actually enter a trade. Filters are good information, but typically filters are based on the same data, whereas setups are based upon various data. So he's given a list here of different setups that are filters that are based on different data that you can use to help you, again, identify and time proper places to get into the market. Some of those setups that he talks about are time filters. And in our free 5-video course on high probability trading setups, we talk about time and understanding the context of a day. Here he's talking more long-term cycles, seasonal data, but even as a day trader, you have to have an understanding of time and when is news coming out and what time of day it is, and knowing whether or not you're going to get a follow-through on your setup. Price data, for our range-bound traders, are we within a range? Are we following a trend? Fundamental data, volume, as we hit certain price points in a range, is volume coming in to push us higher, or is it light pullback? Volatility, business fundamentals, that's Warren Buffett right there. And of course, who's running your potential investment? These are all potential filters and setups that you can use to help you identify when to get in a trade. And these typically to be more long-term investment versus day trading strategies. But again, as I said, time and volume certainly are used as we're trading futures. So you guys know we're on Twitter as emini-coach, and Facebook, we've got a page on Facebook on high probability trading setups, and of course you're watching our videos on YouTube. As I just mentioned, we do have a great free 5-part video course on how to develop a high probability trading setup. All you gotta do is go to this link here, emini-trading-coach.com/free video, and you can sign up for that. We've got a great instructional video course. It's not like these other places charging $2,000 to $3,000. It's got everything you need, the building blocks of trading, the different components of a trading plan, and then talking about market internals and the setups in more detail. And again, you can see it's $250, and you also get a free coaching session, which is why we're not really focusing on trying to make thousands of dollars on a system, because there are so many systems out there for free, not as tied together as ours. But the point is, what's going to change your trading is not the system, it's your internal structure. And our coaching program helps change your internal structure from being afraid to pull the trigger to being able to have a personalized trading plan that you can pull the trigger on. Of course, we got a great relationship with Global Futures, and we are starting a Forex video series at yourforexriches.com. We are starting a Forex blog and a Forex video series to help with high probability trading with Forex also. Because in the end, it doesn't make a difference about the system, the indicator, or newsletter. If you're unable to pull the trigger, you're not going to be a profitable trader. And that's what we at emini-trading-coach are all about, helping you build that psychological capital, that inner structure needed to be a profitable, consistent trader. Thanks, guys, and I'll see you next time.